Hi traders, have you ever noticed that many trading indicators actually lag or they are showing simply untradeable information? Well, it happens quite often, but this is because you are misusing and misunderstanding the most important aspect in trading, and this is prices. Prices themselves are the key indicator and key thing to understand. The best way how you could actually use prices in your advantage is by understanding price breakouts. And this is the video where we'll see just that. My name is Jan Zdabos and I have 15 years of trading experience. I have traded across different markets and I have created several successful trading strategies. And in this video, you will see how to correctly apply price breakouts. You will see how to analyze market patterns, how to actually enter your trades, how to correctly set up your trade exit, and how to avoid typical mistakes which are associated with price breakouts. So let's start. Okay, what exactly are price breakouts? In simple terms, price breakouts are patterns and instances when prices are breaking out of previous higher or lower prices. So for instance, we might have situation where prices have been breaking down on downside as you have here and you have here, or when they have been breaking on upside, or in simple words, times when previous patterns are broken and new price heights or new price lows are met. That's simple as that. And this simple approach is why it makes it so effective. But to correctly apply price breakouts and understand how actually they look, if you don't know anything about price breakouts, first things first is to see different chart patterns from which price breakouts are developing. So we will start with that, and we will start with the simplest approach, which is supply and resistance type of price breakouts. For that, I will open actually Fibonacci levels, because Fibonacci levels will show very well support and resistance lines, and you will see how these support and resistance lines are traded and how they actually move. So we have highs and lows, and you could actually see how we are trading them and how we could actually make money from it. As you see, prices are finding key support and resistance lines within Fibonacci levels, and then they might form natural support lines and resistance lines, and at some point they might be broken up at higher or at lower end of the spectrum. And this is the simplest way how to understand it. It actually goes in all of these places where you can draw support line here and resistance line here, or here we have one resistance line, one support line, and from then these prices are bouncing and finding their own ways how they actually can move. So this approach is actually very good if you want to have short-term trades. If you see something goes out of this strong support and resistance line, you could either go long or you could either go short and make some quick money. This is how it works with simple support and resistance levels. Okay, second example is where we have small wedges and they are broken out and we are making new highs. I just give you an example here. Here we have strong support and we have slightly angled resistance lines where we could see that prices are going in narrower direction and then they are broken out on upward side. And the same pattern could go on downside as well, and there are dozens of examples how that works, where you have larger price fluctuations, it narrows down and explodes to one side or another. It happens here, it happened here, it happened here, and we have dozens and dozens of examples like that. This is second type of price breakout, and you could actually trade this on slightly larger times and time price targets than with simple support and resistance lines. Third one actually is similar as it is with the previous one. If in previous example we explored various kinds of wedges, then now we could actually draw something similar as a flag. So these flags could be rising, these flags could be falling, and they could actually go at sideways directions. For instance, now we have movement in support and resistance lines when prices moved upward, and then we had downward price breakout and prices fell lower. So it happens also in this case and in this case and in this case. You see there is flag pattern upside in these three cases, and then we simply had breakout at opposite direction and prices exploded downwards. So in fact, these are three simpler approaches how you could actually see price breakouts. So first is when prices are having movement in one direct support and resistance lines, and when these support and resistance lines are broken, you could actually go higher or lower. Second is when you have triangle or wedge situation, when prices are having high fluctuation and then that volume and fluctuation narrows and eventually that prices are breaking out on upwards or downwards direction. depending on market situation. And third is so-called flag situation, when prices are making moves at upwards or downwards move at certain support and resistance range, and when that range is broken at opposite direction, you might have some breakout move at that side. So actually, that's really simple to understand once you have a couple of examples, but trick here is to have good risk rewards and proportions, how we could actually trade them. So you have to see how strong this movement is and how good this pattern is, and this will determine how much you're going to make in trading. And here the money management and risk management is crucial. But by the way, if you want to see additional analysis on price breakouts for different time of markets, time frames, and trading strategies, yes, breakouts might have different trading strategies, then join my free Telegram channel, because there you'll see correct market analysis, trade setups, and trading signals for various types of trading strategies. And what's exceptional for this is it's all for free. So all you have to do is join by visiting my link below the video, and you're all set, and we could actually start to trade from there. But now let's move to practical side. Okay, traders, now let's draw some support and resistance lines, and we'll make some breakout trades. So as you see, now we have flag pattern, and I sense we might have good price breakouts. So allow me to draw this pattern and see how we could actually break down this trade and make some money here. So now we see that prices have just moved above the major flag, and that means we will buy. We risk 2% of our capital. We made trade for 1 minute, and we will see how this will go. Markets are moving at our direction, so price breakout seems to be correct, but still it's too early to tell how much we have. 15 seconds to go, so whether this pattern will continue or we might have nasty reversal. Let's see. Okay, how much? 7, 6, 5, 4, 3, 2, 1, and we made money. This is example how price breakouts worked in action, and it gave us $156. So this is one example how you could actually trade this with money. Okay, traders, we might have situation here. So it looks like prices have been reverting from previous downsides, and we might catch new price breakout. Let's see. I have suspicion that this might be a good price breakout trade from bearish price flag. Let's see. So we had some sort of downward wedge, and we just broke that out, and now we are going along. Let's see how this will look. You see, prices were having nice little fall, and it moved at good support and resistance lines, but then it narrowed down and actually exploded on upside. So let's see whether this price breakout will actually give us some decent trading opportunities. It's tense how much we have. We have 30 seconds, and I cannot actually give some valid analysis because I'm over concentrating. There's nothing I can do, but I'm still tense. This is problem of trading. It's really difficult to just step away and be completely neutral. But okay, 10 seconds to go. We are at profit. So 7, 6, 5, 4, 3, 2, 1. Ka-ching! $158 book. What we can say, first and foremost, you have to check prices, and price action is the key indicator in trading. And there is very little ways how you can actually make money better than with price breakouts. And if you want to see price breakouts, you have to see price patterns. And this is what we saw. We saw support and resistance pattern. And when it is broken up, you could make money or either on upwards breakout or downward breakout. Secondly is when you see triangles and wedges, when prices have huge fluctuations and then those fluctuations narrow down, and you could actually trade on that breakout at bullish or bearish side, depending on where the breakout is. And third is flag situation, when prices have upward or downward flag when it's moving at support and resistance lines, and when that flag is broken at opposite direction,